Inventory may be normalizing, incentives are still scarce, and dealer profitability has never been better. But there's a serious issue that is lurking on the retail horizon. It's called affordability.
Jason, I think it's the number one problem for auto retailers today, but more importantly, it's the number one problem for consumers. And some of it is that the mix of products that were produced were not driven toward affordability. They're driven toward margin.
This is Full Throttle, the Presidio Group's automotive industry podcast. I'm your host, Jason Stein, Presidio's marketing and communications advisor and host of SiriusXM's Cars and Culture on Business Channel 132. On a monthly basis, Full Throttle will serve as the industry's meeting point for great conversations with leaders across the automotive world. Our aim is to provide insight from the insiders and meaningful conversations with thought leaders who make news. We start our series today with entrepreneur, investor, and second-generation auto retailer Mike Maroone, CEO of Maroone USA. And we begin where 2022 ends. As we close out a year in automotive retail, perhaps unlike many others, the landscape shows both opportunity and risk. With an unprecedented swing in favor of the consumer and demand far outstripping supply for more than 18 months, rules are being rewritten at the dealer level. Operations are being analyzed in a way that they have never before, and change has occurred in ways unimaginable. So what's the future of the workforce, OEM relations, inventory levels, and perhaps what's more, what in the world is going to happen in the mergers and acquisition space? For such unprecedented activity, why not call on someone who's witnessed change at every level, from his father's showroom to the highest executive levels at the nation's largest retail group, AutoNation, and now onto his own stores in Florida and Colorado. Mike Maroone, a name recognized at all levels of retail, a measured leader with decades of experience. He's simply seen it all. Mike's perspective contains all the elements of context required at a time of transformation, threat, and opportunity. So where does he think the industry's headed? He's my guest today on this inaugural edition of Full Throttle, the Presidio Group's automotive industry podcast. Presidio is the largest nationally registered investment bank solely focused on the auto retail sector. It works with clients on mergers and acquisitions, private capital raising, and principal investing. Presidio focuses on two sectors within the U.S. auto retail channel: dealerships and other technology companies servicing the auto retail channel. During their careers, the professionals at Presidio have collectively done over 210 transactions for more than $14 billion, including a few of the highest profile, largest deals in recent automotive retail history. We begin Full Throttle with Mike Maroone.
Hi, I'm Mike Maroone, and I'm on Presidio's podcast, Full Throttle.
Well, it's appropriate that I bookend my last venture with my new venture and welcome in my longtime friend, Mike Maroone. Mike, how are you?
Jason, it's great to be with you. Thanks for having me on today.
It's a pleasure to have you as the opening guest on Full Throttle. Let's talk about the throttle that is the industry, more importantly at the retail level, what you've seen really over the course of the last couple of years. But let's start with inventory. It's been the subject, Mike, that has dominated the industry for the better part of COVID and post-COVID. Where are we right now? How do you feel about the inventory situation?
Well, Jason, the inventory situation is beginning to normalize, but at the very early stages. But what's interesting is it varies widely by OEM. Some of the OEMs that had vibrant inventories last summer are very short now, and vice versa. So it's a very fluid situation. It's improving. In part, some of the domestics are taking the vehicles that were missing chips and shipping them this quarter. So we are seeing a surge. But the allocations on the other side are not that robust. So it's fluid, it's interesting. The supply imbalance is made for a very profitable time for retailers. And it'll be interesting to see how we manage through this next chapter.
Could you ever have imagined a situation like this?
Not in my wildest dreams. It's, we were used to higher day supply, higher incentives, and they seem to ratchet up more and more and more every year. And now we're just on the other side of that. And it's created different kinds of problems.
And those problems, one of them is affordability. And you and I have talked about this a lot. The affordability or the lack thereof, primarily created from the first problem that we talked about. Give me your view on affordability in the marketplace.
Jason, I think it's the number one problem for auto retailers today, but more importantly, it's the number one problem for consumers. consumers are hit with four different things that drive this affordability issue. First of all, the OEMs have increased prices quite dramatically, in part due to their costs, in part due to lack of supply. Second, everybody knows we have much higher interest rates. Third, there is an absence of incentives. And then there's also an absence of leasing alternatives. So all four of those things put a tremendous amount of pressure on consumers. And we feel it in the marketplace. And some of it is that the mix of products that were produced were not driven toward affordability. They're driven toward margin. And that impacted us both on the new vehicle side and the used vehicle side, in that the trade-ins we were getting were quite expensive on the more expensive new product.
Long gone, it seems, is the day that either a couple starting out and wanting to buy a first vehicle for their family, or even a young person starting a new job being able to afford an entry-level sedan. We don't talk about sedans much anymore. And it's driven both of those groups out of the marketplace, right?
It really has. And what it's driven them to is it's driven them to used vehicles where, again, we have an affordability problem. But you can remember way back when they had first-time buyer program and college graduate programs and all these incentives to get people in their new cars. We haven't heard about those in a long time. So again, the used vehicle business has benefited, but it's a very difficult thing for consumers.
That $500 offer that you get if you'd signed up for a certain credit card, right?
Exactly.
So a lot of challenges, but opportunities. Where are the opportunities today, in your opinion?
Well, I think the opportunities is to manage our margins and manage our inventories in a different way. I think we've realized that, quote unquote, giving vehicles away to earn more of those vehicles is not the strategy to pursue. So the opportunity is to manage the margins. The opportunity continues to be to source used vehicles in creative ways until affordability no longer becomes the issue. And I'm not sure when that'll be. On the challenge side, there's several. One is the units in operation, what we refer to in the industry as the UIO, is badly affected by the last 2 years, or if you're in the GM side where they had an extended strike, almost the last 3 years. So we're going to pay a price for that in our parts and service departments, and we're going to have to work really hard to earn our guest maintenance business, because we're not going to have the UIO and the mechanical breakdown that we've had in the past. I think the other challenge, which is really interesting, is all the OEMs are talking about turning your inventory. And almost daily, we get graded by all of them. Are we turning faster than our competition? Are we turning faster in other regions? And it's going to be that turn versus margin challenge that will be really fun to navigate, because obviously we want to earn our unfair share. We also want to keep our margin. And I'd say the third thing is our challenge is, as margins restore to a more normal level, how do we get more efficiency and more productivity so that our associates can continue to earn really good paychecks and good bonuses, which they've enjoyed the last couple of years? So right now we're thinking about how can we become more efficient? How can we help people be more productive?
There's nonstop conversation and nonstop activity around the subject of electrification. And it seems that in this current era that we're in, it's the only topic that exists right now. What are your thoughts on transition and the rollout that is coming over the course of the next 12 to 18 to 36 months?
First of all, I think it's very exciting to have new product. Certainly, there's an alignment with clean air and people's desire to make the world a better place. I don't think many people can debate that anymore. Secondly, EVs are really fun to drive. You've driven them, I've driven them, and they are exciting. They accelerate well. They're really a new experience for drivers. But then there's a whole rash of problems. And the rollout itself, I think, is going to be very bumpy. It's obvious we've got changes in the way governments support or don't support EVs. People still have range anxieties. The charging infrastructure and the grid are nowhere near where they need to be. There's just a bunch of issues, and I believe that the rollout's going to be a little bit slower than was projected. There's a lot of conversations about electric vehicles coming to market, but the reality of it is there's very few on ground. A positive is when we take them in used cars, when we take an EV in as a used vehicle, they sell almost immediately. So we know there's demand, there's not a lot of supply, and there's plenty of challenges, but I think it's going to be a great era. Yeah, there's plenty to worry about, but there's also a lot to be excited about.
And I think there's a lot to be excited about with internal combustion engines still as a bit of a run out, right?
No doubt about it. And it's some of the meetings that I've been to, some of the national meetings, dealers have been very enthused that they're about the plans to continue the ICE vehicles, especially in the pickup trucks and the sport utilities, which hold a lot of margin for manufacturers, hold a lot of margin for dealers, and a lot of demand for consumers.
And there are issues related to it. You alluded to this a moment ago, Mike, but there are issues related to the rollout, the transition of manufacturing facilities, a new workforce, a new platform. And that doesn't even get into the fact that the infrastructure, if we were to flip from a low single digit percentage of sales to a high single digit, where are you going to charge most of those vehicles? And a lot of dealerships don't want to put in charging stations to have dealers or to have customers sit around and charge their cars, I'm guessing.
I think that this thing will all evolve. And I think there'll be such a massive investment in charging infrastructure. I'm pretty confident that will be solved. But I will tell you, I'm happy to be on the retailer side, Jason. On the OEM side, to have to make the investments they're making in EV, in hybrids, and in ICE engines. I mean, those are massive investments. And over time, I don't think anybody can support all three of those paths. So I think that EVs will come, but there's a lot of issues that need to be dealt with. And these are fun problems.
One of the issues that will need to be dealt with is that capital infrastructure at the retail level, the spending and investment that would need to occur. And that has fueled a lot of talk of M&A. You've been on the buying side here over the course of the last few years. Give me your view on where we are with M&A today.
M&A is really interesting. There is a major disconnect between sellers' ask and buyers' willingness to pay. And all of it is based around what's that business going to earn and what kind of cash flows it going to drive on a normalized basis. It's easy to talk about multiples, and many of the firms, Presidio being a leader, talks about this multiple for this franchise. What nobody can predict is what's this next chapter going to be in 23 and 24 in terms of profitability. So I think there's an impasse. There's also other issues of you've got dramatically higher costs in real estate. So when interest rates were very low, real estate investors were much more aggressive. And so when you go to do comparable sales and valuations, real estate prices are extremely high, and interest costs for borrowers are very high. And typically in an M&A transaction, buyers finance 50% of the goodwill and a certain percentage of the real estate. And those interest costs are really driving the price up. So not only is there a lack of willingness to pay multiples on 21 and 22 earnings, there's also a bunch of other factors that really make it more difficult. And these things will normalize over time. We've been through these chapters before. But I don't expect a lot of M&A activity until we really see what normal will be.
I mentioned you being on the buying side. Tell me a little bit about Maroone USA today.
Well, Jason, we have one transaction that will be closing on December 1st. It's in one of our core markets in Colorado. And it's an interesting transaction because the family that's the seller has been in the business for decades and has a culture that is very that aligns really well with our culture. The values are similar, and we're really excited. I obviously can't talk and name that store until it closes, but it's a good cultural fit. It's a good market fit for us, and we're excited. And, every year we're looking at a lot of opportunities, and we've made a number of acquisitions in the last several years, but we're being very careful to look at the fit, make sure that we've got the talent that we've developed internally that can complement the talent of the seller. So we're excited about this chapter. We're excited about our new acquisition and continue to look for other opportunities that fit.
You have 1 foot in Colorado and 1 foot in Florida. Would you have a foot in a different state if you had 3 feet?
Jason, we've talked about that a lot within our family. And I think those two markets are markets that excite us. I have residents in those markets. Those markets are growing markets. Most importantly, we've got real talent in each of those markets. And giving people an opportunity to grow is one of our core principles. And, we talk about it a lot in our organization, and I feel very obligated to deliver growth opportunities for our people and for our family.
I talked to you finally. I talked to you in my final chapter at Automotive News with one of my final podcasts on Daily Drive. And I talked to you in one of the first podcasts on Daily Drive, which of course was almost 2.5 years ago now. Learnings over the course of those last 2.5 years and where we sit today?
Jason, I think it's pretty simple. You've got to stay nimble. You've got to stay flexible. And, I was taught a long time in the business, don't get too high when things are good and don't get too low when things are bad. Just keep working hard, stick to your founding principles, and everything will work out pretty well. And that's why when I look at things like EVs and I look at high acquisition prices and labor challenges, say this too will pass. Let's just keep doing the things that we've done over the course of time and stay true to ourselves.
He is the inaugural guest on Full Throttle. Mike Maroone, thank you so much for being with me.
Jason, it's a privilege and it's an honor to be with you. And I wish you great success with Full Throttle.
Thank you. Thanks again to my guest, Mike Maroone, and thanks for listening to Full Throttle. Come back to us in January for our next interview on this platform. Suggestions? Email me at jason@flat6media.com. And to learn more about the Presidio Group, go to thepresidiogroup.com or follow us on LinkedIn. Thanks again for listening.